What's going on, guys? Welcome to another video here at the Millionaires Meta Forum. Today we took two trades, and one was a winning trade and one was a losing trade, but we still came out of the day green, and this is exactly how we did it. So to start off the day, here in the market updates tab inside the Discord, I had mentioned, after I've done my pre-market analysis, I had said in here that ES, I can see us taking out sell side liquidity, hitting the 2-hour and daily fair value gap, then bouncing. This will be the case of taking out long positions at that level. And this is exactly what that looks like. We've got that 2-hour fair value gap, and we got that daily fair value gap, right? So you come down here, and I said, if we want to get below all this liquidity, sellers have big shoes to fill. Make sure you wait until after manipulation phase in these areas to then put on risk. Manipulation phase equals stops hit. The market knows how you all are thinking. If $1 million falls from the sky, the sender will know the actions of everyone. Everyone will gather and collect. Be a sniper, know the obvious actions of others. I posted this in the Discord. I've gotten this off Google. When there is no specific objective, a sniper will look for targets of opportunity. By tracking enemy movement, snipers wait patiently for the unsuspected soldiers to present the opportunity for a perfect shot. And then I said down here, a sniper will have more control than most other soldiers and be more aware of his surroundings, or have more situational awareness of things around him. Other people may wrongly assume that a group of snipers are cold-blooded or uncaring, and that is not true. They're just calmer people who think rather than react in panic and scream like excited little children. And that is exactly the psychology that you want to put on when you're really, interpreting price. And then, how the market is really, facilitating its trade. You understand that? So a little bit more down here at around 12:29 p.m. New York time, I said, ES taking its time, but it's in the works. And this is exactly what I had said. If you go up before the market even opened, this is exactly what I had mentioned, that we were going to, eventually come down and fill that liquidity there. And a lot of times that's exactly what you, look to do before making a bigger move up. So anyway, let's get here at the charts, and let's make sense of all this. Put that down there. So what I'm going to do is I am going to completely start a new drawing set here. Create drawing set, and I'm going to do YouTube video. I didn't spell that right. Fuck it, though. All right, so exactly how would I have started my day with my pre-market analysis? Well, I need a bit of bias here to go off of. I need a little bit of direction-based bias. So I'm going to go over here. And what I was thinking straight at the open was that, check this out. We were above, right here. I'm going to draw this out. We were above a range. Let me make this more clear, guys. Bang. We were above a range here that we've been in for about 2 weeks. And now that plays a very, very important role here. So you can see we trembled a lot in this area here. You see that? We just stayed consolidating, right? Buyers were agreeing with sellers and sellers were agreeing with buyers, right? And then we made a big bullish move up, and we've been green for the past 4 days here. So with knowing that, I zoomed in here and I was like, you know what? We broke this structure here with very bullish confirmation. So what I was looking to do here was I was looking to do a daily fair value gap here. Now, what I did there was I made that gray, just to know that I did that dark gray, just to know that it was a fair value gap on the daily time frame. I like to color code it and do darker colors for the higher the time frame. So let's go down here to a 4-hour time frame, and let's exactly see what we got here. All right, check this out. So right off the bat, we can see that we have demand down here, right? So now check out all these different things. We've got demand right here. I'm going to mark that up as green. We've got demand. We've got a daily fair value gap to fill here. Now, let's keep on going here. Now, right off the bat, we could see we have a 4, let's go down to the 2-hour. The 2-hour looks, more perfect. You can see it more clear. Check this out. We have a 2-hour fair value gap within this range here. Now, I'm going to keep that yellow. Usually I would do it a lighter gray, but that just works here for the video. So right here we have a daily fair value gap we have another fair value gap inside that daily fair value gap, which is what? The 2-hour fair value gap, right? And then we've got demand down here. Here, let's turn transparency up here. Boom. All right, guys. So now we know that. Guess what we're going to do here? We're going to mark up where sell side liquidity is here. And that's right at that low there. So I am going to edit this price level. And I'm going to put that as sell side liquidity. All right, beautiful. Now we go down to a lower time frame. And guess what? Go down to a 1-hour time frame. I mean, look at how beautiful and well that just comes together. We have all this liquidity here, and now that we're making new highs there, I was assuming, and we had a new high before we even opened, I was assuming that we were going to climb there, get a lot of people in longs there, and then trap their positions and take out stops. So now that we have all this, and you guys see my bias here, you guys saw it all written in the Discord, my pre-market commentary, we're going to go to the drawing set. Where is it? Today, we're going to go to the drawing set here. Gonna completely did I just delete that? Fuck, I just deleted that. Alright, well, guess we're just gonna have to go off bare bones here. But check this out. So we open up right here. This is the 930 candle right here. We open up, and then guess what? We make a move higher, right? Now, we had these highs that were initially made right here on this 925 candle. We came up, guess what? Guess what we had here? We have buy-side liquidity here. We swept it here and swept it here. We came down, and then we made these very, weird-looking candles where we didn't have a lot of momentum and a lot of interest in that upside. So I was like, all right, you know what? People are going to be getting stopped out here. You guys see that? So with that being said, with knowing all of that, I was like, all right. So what I did here was I waited for retail to get stopped out, and I knew exactly where they were placing their positions, right? I knew they were getting in positions at the highs there, and I knew exactly where they were placing their stop losses, right? They were placing their stop losses firstly right here, and in that case, they took, right here. Check this out. And I had this written up and I was, going over it. All right, let me make this black so that you guys could see it more. All right, so you guys could see that that would have been their first stop loss. And then this was, would have been some other stop losses. And in that case right here, it was hit. Both of them were hit. And then we started coming up again. Now they're like, oh, my stop loss just got hit. We're bearish. So they get in and then they set their stop loss up here and stop losses are hit again. So you guys essentially see how the market's doing that. And if you think like a retail trader, you're going to, get treated like a retail trader. So that's why you got to wait for all this to pass. And in this case, there was nothing here that looked very well to trade at all. So with that being said, I was like, right? So now if we go to a lower time frame, we could see that there's a fair value gap here. It was more defined on the lower time frames. But I saw this here, and I marked it up right there. And then guess what? I took a short position right inside this fair value gap, right around here, very at the top there. And then I wrote it all the way down to here at the bottom of this wick. And I actually called this bottom here. I called that bottom there because what was this? It was the 50% retracement there on the Fibonacci. So I was like, you know what? All right, I'll ride this from, where I've gotten it in the fair value gap all the way down to this Fibonacci retracement, and how the market's reacting at that certain point. I'll look to get out here, and I'll look to take profit here. And in that case, I did, because by the time we got down here, I was like, I don't feel comfortable, holding it past there. And I took it. I took it off the table for profit, and my price target was hit, and it was beautiful, right? Now, where was my second trade taken? My second trade was taken down here, right at this red candle. And guess what? My price target was this fair value gap again. And guess what? Or I'm sorry, it was the top. It was this 5632 level. And we missed it by a little bit. We missed it by 2 points. And it came up here and then started going back down, right? Now, where did I take my stop loss? I took my stop loss at a 2-point loss there, which was a beautiful risk to reward if you ask me. So that was essentially my trading day. everything, worked out in our favor. We still came out green because remember, you should be able to take one losing trade and one winning trade and come out of the day green, right? And that just comes with beautiful risk to reward. You shouldn't be, risking 10 points to make 10 points. That is completely stupid. A lot of you guys let it run because you're like, oh, this thing, let me show you guys something. This is exactly why you guys let this run. Now, if I come down here into my market psychology tab, market psychology, and I come up here, check this out. This is the psychology of a market cycle, the market of feelings. This is exactly where your traders are feeling their feelings, that disbelief, hope, belief, euphoria, then anxiety, then, right here, they're like, all right, this is going to come up here. We're already far up here. And then guess what? Denial that it's not going to go down. Then they're panicking and they're like, oh, I got to get this thing to come up a little bit. I don't want to take this much of a loss. Then guess what? They take their loss down here in disbelief. And that is exactly how the psychology of a market cycle works. And that's the feelings that you guys go through on a daily. And that's the reason why a lot of traders take more of a loss than they even need to. So guys, I am going to wrap this video up here. That was my analysis on this video. I think it was a beautiful fucking day. I think that the day was a little bit, we could have got bigger moves. But nonetheless, great trading. We had great patience throughout the day. And that's essentially all you need. You need to stick to your plan 100% of the times. You don't need to take a trade every single day. You don't need to put on risk every single day. Guys, I'm going to end the YouTube video here. I hope you guys enjoyed. And make sure you guys like, subscribe, turn on the post notifications. And I will see you guys in the next video.